So lately I've been getting flooded with a lot of comments asking me for my opinion on Corsair Stock. And a lot of those people mention that this is one of the newest additions to Jeremy's portfolio from financial education. Now, unfortunately, I don't really have a lot of free time to watch other stock market YouTubers. It's just not really my thing. So I'm not sure how bullish Jeremy is on the stock, or if he even owns it. He might not even own it anymore. But a lot of people want to know what my opinion is on the company and the stock, so that's exactly what I'll be sharing in today's video. And because this is a stock that I do not already own, I'll also let you know, as always, if I plan to buy this stock myself as a long-term investment anytime soon. Should be a fun video though. I hope you guys enjoyed. Hit the like button if you do, and let me know down below what your opinion is on the stock and if there's any other stocks that you would like me to cover as well in the future. But with all that said, let's go ahead and start by taking a look at the company, and then we'll take a look at the stock as well, and I'll let you know where I see this company and the stock headed in the future over the long term. Okay, so as far as the company goes, this is a leader in PC parts and modules. You might even recognize them in your own PC with things like their DRAM memory kits and so on. But overall, it's a very gaming focused company that even sells you fully built gaming PCs, as well as various gaming accessories like keyboards, headsets, and even chairs. And just a couple years ago, the company gained a lot of attention for acquiring Elgato Gaming, which is easily the most recognized name in the video game streaming community, which we all know has been blowing up in recent years with platforms like Twitch. So now Corsair even sells things like capture cards to record video game footage, streaming decks to kind of organize and manage everything while you're streaming, and then microphones, lighting, and even green screens to kind of complete the entire package, especially if you're doing things like YouTube and stuff like that. By the way, a lot of these things that I've mentioned are not just useful in gaming. In fact, I actually own a lot of these various products myself, or at least very similar ones, just for my work here on YouTube. And there's a lot of other people out there, like students and even professionals, that use gaming level PC hardware just because it's typically the fastest and most powerful stuff available to consumers. So while Corsair is definitely focused on gaming, you shouldn't be tricked into thinking that their market isn't actually a lot larger than you might expect. In fact, they currently have 23 different primary product lines, with many of them dominating their respective markets. You look at this and you're talking second place in keyboards, third in mice, fourth in headsets, second in streaming peripherals, second in performance controllers, second in cases, and then number one in memory, number one in power supply, and number one in cooling. That's very strong leadership in those markets, and you can see just how well they've diversified within that sort of kind of narrower or like more focused market, because a lot of those competitors don't actually overlap into other categories, at least not like Corsair does. So you got to hand it to them. They're doing an amazing job as a company to stay focused and take advantage of their strengths, which leads me to another great point about them. They're not just another case of like, okay, we're at the top, but what can we really do with that? They actually know exactly what to do with that market leadership. They make sure to offer the best performing kind of products that can command a premium price tag over the competition. I mean, you're talking anywhere from 8% to as much as 73% price premiums over a lot of that competition, which is something that significantly improves your margins in markets that typically don't really have very high margins to begin with. So commanding those price premiums can really help you a lot. And again, that's because of their strong brand and for being known for their high quality and reliability. Since 2016, they've already received over 4,000 awards across over 40 different countries. And a lot of this has led to solid performance over the years. We're talking double-digit sales growth consistently almost every single year, with 2020 seeing a gigantic spike of over 50%. However, I do have to note that the huge success of 2020 was in large part thanks to the pepperoni lockdowns that left everyone at home, which meant more gaming and working from home on higher-end PC components and upgrading them and things like that. And that's really something that dramatically boosted their sales. But here in 2021 and 2022, it should start to normalize back down to around 12% and 7% respectively as they break north of that $2 billion mark next year. But really, I gotta say, 7% growth in 2022, that's not as high as I was expecting it to be. Although I gotta be fair, they are coming off of huge growth in 2020 and still very solid performance in 2021. So it's understandable that 2022 is like a smaller year. They kind of normalize a bit and then maybe you have higher growth after that. But it's kind of weird for me because I definitely definitely get a lot of comments from viewers telling me that this is a super high growth company. But in my opinion, I think a lot of that high growth is really thanks to those lockdowns, which I would be cautious of if I was an investor. Although I guess on the other hand, it does also make it a little easier to surprise to the upside if you have lower expectations. So I definitely think that opinions will vary on this depending on how you look at these different growth rates. But overall, I'm just not as, I guess, impressed as I thought I would be, especially looking at like this year and next year. But turning to profits though, it's a little hard to see on this chart here, but net income was positive in 2017, but actually negative in both 2018 and 2019, which isn't very good. They did, however, have a big surge in 2020, but again, I think a lot of that is really attributed to the pepperoni lockdowns, as this year is actually expected to be a slight decline of about 3% as they start to normalize back down a bit, and then only average less than 10% growth over the next 5 years. So I wouldn't really say that their profitability is super impressive right now, although with smaller companies like this, I actually preferred looking at operating cash flow instead, because it shows you the profits from just kind of running their daily operations and doesn't include other expenses like investments for future growth or capital expenditures and other stuff like that. So it's just really like the raw profit that they make from just running the business as of right now, like day to day. And when looking at that, they actually have been making some pretty good progress there. Each of the past 3 years were positive, and again, 2020 was a great year for them, almost reaching $170 million on growth of 355%. So I would say that things are definitely headed in the right direction with this company, and I do actually like some of this stuff that I'm seeing. Still, there are some concerns here, and that's what I want to cover next, because we got to take a closer look at the stock to see what their valuation looks like so that we can compare it to their growth. And because this is still a smaller company in a somewhat competitive field, I'd like to also take a look at how much debt they're carrying in case they do run into any difficult times in the future. You got to remember, when talking about gaming and PC components, some of those markets can actually be very cyclical, and you oftentimes have a lot of competitors that are kind of flooding the market, trying to constantly release better products than you and trying to compete with you and trying to kind of dethrone you. So I think it's very reasonable to expect Corsair to actually go through some tough years in the future. Their overall trajectory can still be very positive over the long term, but what might define a lot of that is how well they perform during the downturns and how quickly and effectively they can recover from them. So that's when things like valuation and debt and profitability come into play, and they actually matter a lot more than you might expect, especially with these type of companies. So let's go ahead and take a closer look at some of those things right now. Well, taking a look at the stock, despite only recently IPOing back in September of last year, Corsair as a company was actually founded back in 1994, so they're really not as young of a company as you might think. But back when they IPO'd around September, I believe that the stock was at around $14 a share at the IPO, and then today they actually trade for over $32 a share, so that's a pretty big increase there of around 130% since then. Now, having said that, last year they reached as much as $51 a share before coming back down. So currently, they're actually just slightly lower than the midpoint of their 52-week range. And hey, to be fair, this might actually be a pretty attractive price. When you look at analyst estimates from Yahoo Finance, there are 0 sell or underperform ratings, and the average price target is almost 50% higher than where the stock is trading today. And even the lowest estimate is still almost 15% higher as well, meaning that basically all analysts surveyed think the stock is really undervalued right now. And to be honest, as long as it's a good company that isn't in heavy decline but is actually growing instead, if you have a share price that is lower or significantly lower than even the lowest estimates from analysts, then you're probably in pretty good shape to be owning that stock. I think in most cases the stock will probably perform well long term from those levels, so this definitely bodes very well in favor of Corsair's current stock price. Okay, so we've established that the current price is pretty attractive, at least based on those analyst estimates, but what about the valuation? What is that looking like? Well, as a market cap, it's pretty small. We're talking only about $3 billion, so there's plenty of room to expand it. And as a PE ratio, trailing is 29 and forward is 21, and then price to sales is also just about 1.8. Typically, 1 or less is considered a good value for that. So in my opinion, these ratios are actually not that bad, especially if you're able to put up decent growth. Seeking Alpha even has their PE ratios about 15 to 20% cheaper than the sector. I guess the only issue that I have myself is that their growth just isn't impressing me that much. First of all, their business is pretty cyclical, which makes it a little harder to predict. Right now, they're likely seeing a big boost from a new console generation in the PS5 and Xbox Series X and S. And while those have really nothing to do with PCs, a new console upgrade cycle typically boosts the entire gaming market as PCs try to kind of stay ahead with greater power and performance. And on top of that, the biggest boost of all is likely coming from the pepperoni lockdowns. And I guess there's really kind of two ways you could look at that. On one hand, as things open back up, you could argue that demand will weaken because there will be like a lot of pent up demand for people going outside and perhaps spending less time at home, kind of, like glued to computer screens. But on the other hand, I think a lot of businesses are actually going to make permanent changes for allowing work at home options. And we're already seeing multiple news outlets report on this. The thing is, these companies feel that they can get good press by allowing work from home, and many employees actually prefer to work from home too. So it may set up for a longer trend. I personally have mixed feelings on it myself, but I can't deny that this is definitely something that's happening right now. In fact, according to Global Workplace Analytics, only about 3 to 4% of the entire workforce worked from home in 2018, just about 3 to 4%. Fast forward to today though, and there are projections of that number skyrocketing all the way up to as much as 30% by the end of this year. That is a gigantic increase, and while that's not exactly Corsair's primary target in gamers, it's still very likely going to boost the market for them as people upgrade their equipment to have better performance and efficiency when working from home. Not to mention that it also gives them more time at home kind of overall through either like work breaks or even less commuting, which means more time free to spend on things like video games. So I'm pretty torn on Corsair's cyclical business myself. I think overall there is plenty of growth for them to still have, but I'm worried about how low their projections are for the future. You're talking about a forward P ratio of 21 for sales growth of 12% this year, which I guess that's reasonable, but only 7% growth next year and less than 10% EPS growth on average over the next 5 years. I don't know, that's just not super exciting to me for such a small company. I would expect them to be growing a little bit faster than that. I mean, compared to something like Facebook in the blue there, Facebook has a PE ratio of 24, so just a little bit higher than Corsair. But you look at how gigantic the growth is by comparison. You're talking 25% sales growth this year versus just 12% for Corsair, 19% growth next year versus only 7%, and then EPS growth of 22% on average over the next 5 years versus only 9% by comparison. So, I mean, it's like not even really close. And that's not even mentioning the fact that Facebook is already a massive, massive company, and yet they're still managing to outgrow such a small one. So that doesn't make a whole lot of sense to me. Now, we have to be fair though. The counter argument I think would be that because Corsair is such a smaller company, you're talking about a market cap of around 3 billion versus Facebook at like 764 billion. The theory is that it's a lot easier, or there's at least like a lot more room for Corsair stock to actually grow and go up versus Facebook, who is perhaps a lot closer to their limits. For example, for Corsair to double, it just has to go to like 6 billion, whereas Facebook has to go all the way up to like 1.5 trillion. So that's quite a big difference there. But if you're gonna make that case, you also have to acknowledge the benefits that you'd get from owning such a larger company like Facebook. For one, you get insane profits that make it so much easier for Facebook to weather any storms and continue reinvesting in the company. You're talking over $29 billion in net income for Facebook last year versus only about 0.1 billion for Corsair. And another thing that more profitable companies can do with that cash flow is to pay down their debt and strengthen their balance sheets for future use. And with a company like Facebook, you get one of the absolute best balance sheets in the entire market, with their current assets alone more than doubling all of their liabilities put together at $76 billion, and both a current and total ratio of above 5. Typically you want 1 or better, but Facebook is 5 times that amount. But then compare that to Corsair, where we have to switch the numbers from billions down to millions, and their current assets don't even cover their total liabilities, and their debt ratios, while still above 1, which is good, are much lower than something like Facebook. And I was actually reading a transcript from a Motley Fool podcast recently that was talking about Corsair's debt, and they noted that over the past year, over 30% of their operating income actually went to just paying the interest on their debt. So that's pretty bad. That means that their interest is probably really high and they have to kind of constantly service it. They also noted that before the 2020 boost that they got to their business, interest payments were consistently greater than their operating income. That means that just as a business, they were spending literally all of their profits and more just to pay their interest on their debt. That's pretty bad. Now, I don't want this to sound too negative. I did just make a lot of comparisons to a gigantic and very profitable and well-established company in Facebook, and that's honestly not a very fair comparison. Corsair is a company that has done a very good job of shifting and adapting to changing market trends, and they're now laser focused a lot more on the high growth of gaming and at-home computing, and I do actually think that there's a lot of future potential there. And while I certainly agree that there are a lot of concerns about their debt, I also feel like that's usually the case with smaller companies anyway that are trying to become more dominant in their markets over the long term. It takes time, it takes funding, and in my opinion, I actually think Corsair is doing a really good job and they're headed in the right direction. So as a long-term investment, I really have no problem with Corsair. I think it can be a decent option. If someone was to just gift me Corsair stock, I'd probably just hold on to it long term. And especially as like a spec stock, as like a very tiny portion of someone's portfolio, it doesn't seem like a bad option to me. Having said that, the issues that I have with Corsair is that it's just not as exciting to me. I think there's better options out there. So if this was a stock that I did not already own, which I don't, so I don't already own Corsair, and if you ask me, well, do you want to go out and buy Corsair stock? Well, there's other stocks that I don't own either that I'd be much more willing to buy, like, again, Facebook. I know that's not a fair comparison, but when I think about Corsair as a spec stock, I think there's more exciting spec stocks out there. When I think about Corsair as like a growth or even value stock, I think there's stocks that are valued similarly, kind of like Facebook, that have just so much better performance and a lot less risk because they're so much more established. So I don't know. I just get the feeling that there's better options out there as like a brand new purchase. But if it's a small portion in someone's small position in someone's portfolio, I don't have anything against it. I think it can actually be a decent play. There's potentially a lot of upside, but there is also some risk there too. So I don't know. It's kind of a in the middle kind of stock for me, but not something that overly excites me where I gotta like go out and just buy a ton of it. So anyway, I'll probably be staying on the sidelines with this one, but it is an interesting stock, so I will continue to track it and watch it, and maybe I actually end up buying it in the future if something big happens with the stock. But as of right now, I just think there's better options out there. So not a stock that I'll be picking up at this time. But let me know if any of you guys are invested in Corsair stock or you're thinking about it, or if there's any other stocks that you like a lot more. Let me know what those are down below and maybe I'll make a video on them in the future. Anyway, thanks again for watching, guys. I really appreciate all the support. I hope you're all enjoying the channel and got a lot more videos coming up for you guys in the future too. So please hang in there. Thank you for all the support. I'll catch you guys in the next one. Take care. Bye-bye.